Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information.
Most traders are losing money because they enter too early or too late. But what if I tell you there is a tiny gap on your chart that reveals the exact price level where institutions used to trap retail traders and then reverse the market? Today, I will be showing you the fair value gap strategy that I promised in my previous video that literally changed everything. And trust me, most traders are still sleeping on this particular idea on forex. Welcome back to my YouTube channel. I'm Mr. Joshua that teach traders how to trade the smart way, and today's video is on one of the most important breakdown on forex which I'll be doing for us. Now this is based on smart money concept, which many of you have not actually learned so well, and I will be doing my best in order to bring understanding to us today. Now, what you are going to learn in this video, the first thing is what a fair value gap really means. You're going to learn it, and you're going to learn exactly how bank create fair money gaps, how to use fair money gaps for your sniper entries, the perfect fair money gap, fair value gap, sorry, continuation rules, and also I'm going to show us on a live chat. Watch this video to the end because I will be sharing a secret at the end of the video as regards the fair value gap. It's something very important that personally I observe about it. I'll be sharing at the end of the video. Now this training is for both beginners and also for both professional. Now by the end of this video you will understand why fair money value gap are one of the most accurate entry system for forex, for indices, for synthetic indices, even for crypto and also for stock. I'm going to be teaching you at the end of this video. Now first thing first, what is a fair value gap in simple terms? Now a fair value gap is a price imbalance created when the market moves too fast in one direction without efficiently filling the orders. Now I'm live with a trade, boom and crash on 15 minutes time frame, and if you look at it well, it's as if it's about to sell, but the signal is yet to be completed. So we'll always wait for us for the signal before we trade. We'll always wait for the signal. It seems as if it's a continuation of trend, so we'll wait for signal before we trade. But before then, let me teach us the fair value gap. Now, like I said, it occurs when a candle moves faster. Now we have three candlesticks here in this particular strategy. The first one will go high, the second one will move fast, and then the third one will go low. That is how this works. Now look at an example here. Look at an example here. Look at the first one. Look at the first one, and then the second one. Then we have the third one. Look at it. Now the three of them, the combination of the three of them form what we call the fair value gap. Now I had to draw this for us so it to be very clear, since in the chart it will be difficult for you to see it very clear in the chart, I had to sit down and bring out this drawing so that we'll have an in-depth understanding of what we are talking about. So we have three candlesticks here representing our fair value gap in forex. Three candlesticks that actually represent this. Now, this create an imbalance zone in the market, meaning that price moved too fast. Banks did not fill all the orders that they were supposed to fill in the three places, in the three candlestick, and then price will likely return to that level before continuing the trend. Now, this is why um the fair value gap is a magnet on the chart, because price is always likely to return back in order to fill. That's imbalance and balance. Now, I have done a video on market efficiency and market inefficiency. I'm going to be dropping those videos on the description button, description section of this video. Now, do well to watch the description section, because I'm dropping many links for us, direct link for us to watch and then to learn what is actually happening in the market. You need to have a clue of everything so that you will not be blind while you enter to trade the market. Now, why institution create this particular gap? Why do we have institution creating this particular gap? Now, banks don't buy or sell with small orders. They don't buy and sell with $100, $200. No, they drop massive position into the market. Now, as a result of that, when the market rapidly move, they leave unfilled position behind. Now, those positions act likely as an open door, so the market must come back to fill the inefficiency. This is how institutions manipulate the chart, which many retail traders don't know, and it is as simple as that. Now, what are the types of fair value gaps that we have? Now, we are having the bullish fair value gap, we're having the bearish fair value gap, and also the correct value gap that we should focus on is just the two of them when there is actually a move. The bullish value gap happens when price aggressively move upward, leaving an imbalance below, while that of the bearish, which is for sell, happens when price aggressively move downward, leaving an imbalance word above. Take note of that, please. Above. Now, the correct way for us to use this fair value gap as an entry is as follows. Now, I want to teach you the strategy. Now, the first thing first is that you need to identify the market structure. I always emphasize on the market structure. Now, when you identify the market structure, is the market bullish or bearish? Now, do not take fair value gap that goes against the structure, because we have many value gaps that goes against structure. Now we are going to go to live trading very soon, and I will show you all these things. Any fair value gap that is against the structure, don't go for it. Wait for fair value gap that goes in direction of the structure. Now, what I mean is that if the structure is bullish, your first fair value gap that you're looking for should be what? A bullish fair value gap. If it is bearish, the fair value gap you are looking for, it should be what? Bearish. Now, when you understand the structure, now you need to find the value gap. Now look for the candle pattern, the 1 2 3 imbalance in the market, and mark the gap. Once you see the 1 2 3, you mark the gap and then wait for price to return back. Price always comes back to those areas. Don't enter early, wait for pullback. Don't just enter early, please. Wait for pullback. Then the first step is that you need to enter at the middle of the fair value gap. Now, for higher accuracy, enter in the midpoint of it and not at the edge of it. Now, what I mean by the midpoint, is at this particular place here. That is the midpoint. You enter at the midpoint. Now, price move from imbalance liquidity to imbalance. then you take profit at the next fair value gap, or the next order block, or the next swing high or low, or liquidity pool. Now you take profit based on wherever you used to take your profit. Like I used to explain to people, you can use market structure to take your profit, which is actually the best. Now, what is the perfect fair value gap confirmation rule that I want to share with us? Because I want to go directly now to live trade. Now, you need to use this to avoid fake fair value gap. Number one confirmation is that you need to understand the market structure. When there is a shift in the market structure shift. Now you need to understand this, watch it, so that if there is a shift, you should know. Now price must break a key level before returning back toward the fair value gap. That is the market structure shift. And then confirmation number two, there should be displacement candlestick. The move that creates the value gap must be strong, impulsive. It must be very strong. Don't enter when the candlestick or the displacement candle is not strong. Make sure it is strong. What bring about the strength? One way to understand the strength is that the candlestick will be what? Long, and then it have big body, it swallows other candlesticks, and then it does not have long wick. That's one of the sign of strength. Then the fair value gap, you for you to confirm it, the third confirmation is that you need to add it with other block or breakers. I've done video on other block. You need to add it with that, and then combining fair value gap with an order block or a breaker actually increase the accuracy massively of your what of your trade. Actually it increase massively. And then lastly, you need to confirm with higher time frame. You get it. You need to confirm with what? With higher time frame. Now higher time frame give us an accurate direction of the market. Now always use the 4 hours and 1 hour time frame in order for you to use. Now if higher time frame agrees with the fair value gap, then accurately you are on the right side. You understand? You are at the right side. Now let's move on to our live chart so that you will see what I have been saying, because now it is not about theory, it is about practical. Now I promise something at the end of this video which I am going to fulfill, so keep watching the video to the end. Keep watching the video to the end. Now remember, three candlesticks forms what? Value gap. Three candlesticks forms value gap. Now let's look for it. Three candlesticks forms value gap. Now guys, while we look for the value gap, if you have not subscribed to this channel, do well to subscribe to this channel. Click the notification bell so you'll be notified whenever I upload a video such as this. And if you have any issue, drop it on the comment section. And then I will respond to you immediately. I will respond to you. You can also share the video to family and friends. Can give the video, carry the link, copy the link and share it to people. Share the link to people so that people will learn. People will learn, because I know that we're doing something very great here. Yes. Look at a value gap. Perfect. At least I've seen a value gap. Now guys, watch this video, watch this aspect very carefully. Yes, so there is a value gap here. Now I will have to use horizontal line. Look at this value gap. Yes, there is a value gap here, and then here comes another value gap. Oh, very good. Now just follow me so you understand this. Now the gaps here are too much. The value gaps here are even too much. This is a bullish value gap. These value gaps are just too much. These value gaps are just too much. You see, price did not come back to balance up. In fact, the gaps here are too much. So you will see how that price came down back to sell to balance up this particular trade. The gaps are too much. The value gaps are too much. Let's leave it to this particular point. You discover that price sold to this particular point. Now let's keep on moving. You see it, huh? Later on, price had to what? Come back to this. You see it, price had to come back to this, and it has not finished because it has not reached the last one. So even if it goes continue going for a buy, it will definitely come back to the last value gap. It will definitely come back to the last value gap, because price cannot continue in an imbalanced manner. It will definitely come back to balance it. You see it, it will definitely come back to balance. This is on gold. This is on gold. Let me look for another currency pair. This one is euro AUD. Let's look for value gap here. Now I'm using the 1 hour time frame because it's very easy for you to see it on the 1 hour time frame. Higher time frames, you can use higher time frames for it. You see it very clear on the higher time frames. Wow. I'm not seeing them. Not seeing an example. I'm not seeing an example. This one is actually a gap, but it's not a value gap. Okay, since we are not having an example here, it's suffering us. Let me just go back here. But most of the times when market opens on Sundays, when market opens, you see value gap, and that value gap actually is very important. It's very important. It gives you the direction of the market. It gives you the direction of the market. Now look at this. Look at the space. You see that there is space between here and here. There is space. It was not covered. The space from here, it was not covered. The space from here to here was not covered. So that is actually the value gap. When the candlestick is not being balanced, it creates what? Gap, and it is called the value gap. Thank you for watching this video. If you found this video interesting and you have learned from this particular video why the value gap strategy is important and powerful in smart money concept, I want you to do a favor by smashing the like button, and also recommend this video to someone. Recommend this video to someone, because I want people to actually have knowledge concerning fair value gap and take advantage of it. Thank you so much. If you have not subscribed to this channel, do well to subscribe to this channel, and also drop a powerful comment on our comment section. And the next video, I'll be teaching on the smart money reversal setup. Now this is not strategy, it's going to be a setup. I will be showing us different setup that smart money concept use for reversal, the setup of smart money concept. Now guys, see you in the next video. Don't miss the next video for anything. Have a great day.